What is going on, crypto enthusiasts? It's your boy Whiteboard Invest back with another exciting crypto update for you today. We've got a lot to cover, so buckle up and get ready for a wild ride. Today, we're going to be talking about all the latest happenings in the cryptoverse, including BTC price update, US Treasury releases first ever NFT risk assessment report, USDe Marketcap hits $3 billion, becoming the fastest growing stable coin. Franklin Templeton ignites ETH ETF fee war, introduces industry lowest 0.19% fee. Robert F. Kennedy Jr. comments on Donald Trump's conviction and pro-crypto stance. Let's not waste another minute. Let's dive into today's hottest crypto news. Bitcoin's price today is $67,500, slightly lower than yesterday's low of $67,800. This slight dip may raise concerns among investors, but it's essential to consider the broader trend. Looking back at historical data, Bitcoin has shown resilience in the face of short-term fluctuations. Similar price movements have occurred in the past, often followed by periods of consolidation or even bullish rallies. One notable pattern to consider is the buy the dip mentality prevalent among Bitcoin investors. In the past, when prices dipped, savvy investors saw it as an opportunity to accumulate more Bitcoin at a lower price, driving prices back up. Additionally, institutional interest and adoption continue to grow, providing strong support for Bitcoin's long-term value proposition. However, it's crucial to acknowledge the volatility inherent in the cryptocurrency market. External factors such as regulatory developments, macroeconomic trends, and geopolitical events can influence Bitcoin's price in unpredictable ways. Therefore, while historical patterns offer insights, they do not guarantee future outcomes. Looking ahead, Bitcoin's price trajectory will likely depend on various factors, including market sentiment, investor behavior, and institutional involvement. If the current support levels hold, we may see Bitcoin consolidate before resuming its upward trend. On the other hand, a breach of support could trigger further downside, potentially testing lower price levels. Ultimately, staying informed and keeping a close eye on market developments is key to navigating the dynamic cryptocurrency landscape. By monitoring price movements, analyzing historical patterns, and staying updated on relevant news, investors can make more informed decisions and adapt to changing market conditions effectively. So, let's stay informed and continue monitoring Bitcoin's price action in the days ahead. Before diving into the next story, ensure you catch every moment till the very end of the video. Trust me, the juiciest updates await you. The US Treasury has raised the alarm about NFTs potentially being used for shady activities like money laundering, terrorist financing, and fraud. Although they admit that most illegal activities still happen with regular money and that NFT scams often use old tricks, they've released their first risk assessment report on NFTs. This digital asset is becoming more popular, but comes with many risks. The report aims to give regulators and the public a deeper understanding of the challenges and threats in the NFT market. One of the biggest concerns in the report is the possibility of NFTs being used for illegal activities. Even though there's not much solid evidence yet that NFTs are being directly used for money laundering or terrorism, the report highlights that NFT transactions could hide the origins of illegal money or transfer money secretly. The Treasury also points out the risks that NFT investors face, such as scams like rug pulls, market manipulation, and other types of fraud. Inexperienced investors can easily fall victim to savvy scammers who exploit the lack of transparency and the complexity of the NFT market for their own gain. However, the report acknowledges that most illegal activities related to digital assets still happen through traditional money. Scams and frauds in the NFT world often use long-established methods like Ponzi schemes and insider trading, rather than new mechanisms specific to NFTs. A striking example mentioned is North Korea's use of digital asset theft, including NFTs, to evade U.S. sanctions and fund military activities. This shows that NFTs and other digital assets can be exploited by rogue nations and organizations for nefarious purposes. To tackle these risks, the report suggests several important steps. First, there needs to be stricter regulation and oversight of the NFT market, with clear rules for anti-money laundering, customer identity verification, and reporting suspicious transactions. Second, it's crucial to enhance cooperation between regulatory agencies, industry players, and international organizations to share information and coordinate efforts against illegal activities. Lastly, educating the public about the risks associated with NFTs is vital to protect investors and ensure market stability. In summary, the U.S. Treasury's report highlights the potential risks of NFTs and recommends measures to mitigate these risks. Following these recommendations will help protect investors, prevent illegal activities, and promote the sustainable growth of the NFT market in the future. Ethena Labs' stablecoin, USDe, has become the fastest-growing stablecoin in the crypto market. In just 4 months since its launch in February 2024, USDe has reached a market cap of $3 billion. This rapid growth puts it on track to potentially overtake DAI, MakerDAO's stablecoin, in terms of total supply. For context, DAI, which launched in 2017, only reached a $3 billion market cap by April 2021. Similarly, USDT, the largest stablecoin, took nearly 5 years to hit the $3 billion mark. Currently, USD holds 3.3% of the total stablecoin market supply, placing it fourth in the rankings. With its explosive growth, many investors believe USD could soon surpass DAI, positioning itself just behind USDT and USDC in total supply. USD maintains its peg through collateralization with stETH and perpetual contracts. Ethena Labs uses a delta hedging strategy, which involves creating offsetting positions in derivatives to balance out any price fluctuations in ETH. For example, when users stake ETH to get USD, Ethena Labs opens a corresponding short position in ETH. This approach aims to keep USD's value stable, regardless of ETH's price movements. If ETH's price goes up, the increased value of the collateral compensates for losses in the short position, and vice versa. However, USD's rapid growth hasn't been without concerns. Memories of the UST stablecoin collapse still linger, causing experts to question USD's sustainability. On April 2, 2024, USD briefly lost its peg, dropping to 0.95, which rattled the market. The following day, influential figure André Cronje voiced his concerns about the inherent risks in USD's algorithmic mechanism. He pointed out that during market downturns, the costs associated with short positions could erode the collateral, leading to liquidation risks and potential loss of the peg. In April 2024, Ethena Labs also airdropped 750 million ENA, their governance token. ENA is currently trading at 0.92, with a market cap of about $1.3 billion and a fully diluted valuation, FDV, of $13.9 billion. In summary, while USD's growth has been impressive, it's crucial to keep an eye on the potential risks. Ethena Labs' innovative hedging strategies and governance initiatives like the ENA airdrop are notable, but the market's volatility and the lessons from past stablecoin failures remind us to remain cautious. If you enjoyed this video, don't forget to leave a like and subscribe. Your support means the world to me and keeps me motivated to bring you the hottest news updates every day. Franklin Templeton, VanEck, and Invesco Galaxy have jumped into the race to grab a piece of the Ethereum spot ETF market. They all filed updated S-1 forms with the SEC on Friday, May 31st, marking a significant step forward in their quest to launch these investment products. The goal here is to give investors an easy way to get into Ethereum without having to buy the cryptocurrency directly. One standout in these filings is Franklin Templeton's proposed management fee of just 0.19% for its Ethereum spot ETF. This matches the fee they charge for their Bitcoin spot ETF, EZBC, and is considerably lower than what other ETF issuers are offering. Bloomberg's senior ETF analyst Eric Balchunas even called this move the first shot in a fee war among ETF providers. Unlike Bitcoin ETFs, where companies usually announce their fees right from the start, the fees for these Ethereum ETFs were revealed later in the filing process. This delay might reflect the intense competition and the careful consideration companies are giving to setting the right fee. Even though the SEC required all spot Ethereum ETF issuers to file their amended forms by May 31st, it might still take a few weeks for these applications to be approved and for the new ETFs to start trading. But the fact that big names like Franklin Templeton, Van Eck, and Invesco Galaxy all submitted their filings at the same time shows just how much interest there is in launching these products. Van Eck shared that they've already received an initial investment of $100,000 for their Ethereum spot ETF. Meanwhile, Invesco Galaxy disclosed that Bank of New York Mellon will handle the cash custody, and Coinbase Custody Trust Company LLC will take care of the Ether for their ETF. The competition is heating up as other heavyweights like BlackRock and Fidelity have also confirmed they're planning to join the Ethereum ETF market. This means the race to capture market share will be fierce. With the lowest management fee in the market, Franklin Templeton is likely to draw a lot of investor interest. However, there's still a big question mark over whether the SEC will approve these applications. Adding more fuel to the fire, Ethereum's price has gone up by 1.34%, reaching $3,773, which only adds more excitement to the ongoing battle among ETF providers. Robert F. Kennedy Jr., the nephew of former President John F. Kennedy, is jumping into the presidential race with a strong pro-crypto stance. At the Consensus 2024 event, he emphasized the importance of crypto for economic freedom and transparency. He even hopes President Biden will join in supporting crypto, just like Trump. Kennedy addressed the regulatory challenges the U.S. faces, stressing the need to protect users from fraud while keeping the U.S. at the forefront of blockchain technology. He believes in the sovereignty of personal digital wallets and the freedom to transact without heavy regulation. To show his commitment, he shared that he has purchased 21 Bitcoin since starting his campaign and has also bought 3 Bitcoin for each of his children. Kennedy also advocates for treating cryptocurrencies as legal tender, rather than taxing them like capital gains. He envisions a future where people can use crypto for everyday purchases like apples, lunch, and coffee. This stance comes amid Trump's legal troubles, with him facing 34 criminal charges related to falsifying records and paying off Stormy Daniels. Despite these issues, Trump remains influential, especially among crypto enthusiasts, thanks to his active engagement with the community, including hosting dinners for NFT holders and accepting crypto donations for his campaign. Interestingly, even the Biden administration has shifted its stance, showing more support for crypto. They recently decided not to veto the FIT21 crypto regulation bill and directed the SEC to approve Ethereum spot ETFs, marking a significant change from their previous position. With Ethereum's price up 1.34% to $3,673, the pro-crypto sentiment is clearly becoming a major topic in U.S. politics.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.